US-Iran tension escalated again, but investors largely ignored it, anticipating the ceasefire will essentially be reinstated. Markets finished up over 1% this week anyways, despite oil and gas prices rising again. Let's quickly recap. Monday opened higher on a sharp tech and AI rebound, but then Tuesday slipped as the US-Iran tensions reignited. Wednesday dropped again after the White House signaled that the ceasefire was over. However, Thursday rebounded after the US launched new strikes, but with hopes that that was it. Finally, Friday continued to creep higher with the US strikes seemingly on pause again. So what's the deal? Well, investors are completely tuning out the geopolitical posturing. As we've mentioned before, the oil market is the barometer for market sentiment. It's up a little from last week, but still sitting only slightly higher than pre-war levels. Similarly with gas prices, they rose a little bit this week, but not in panic mode. That basically means there's very little concern on Wall Street. So what now? Outside of any weekend war updates, next week is all about inflation. Incoming inflation data will be viewed as the driver for the Fed's looming rate hike decision. On Tuesday, we get the June CPI, consumer inflation report. Then the PPI producer inflation numbers drop the very next day. Economists expect that consumer inflation actually deflated last month, while producer costs are expected to trend higher but at a much more moderate pace. Investors hope inflation pulls back so the Fed can take rate hikes back off the table. More next week. Stay tuned.